All right. How was that coffee, Robert?
That's apple cider vinegar, actually, but
Okay. Apple cider vinegar, good for you. So, welcome to this episode of Real Estate Chat with Robert Eid
and John de Perez.
and John De Perez. That's right. So, one of the questions we get asked is when will prices stop dropping? When will prices increase? Is now the time to buy? Should I sell now? What's going on with the spring market? What's happening with January sales? A whole bunch of stuff is being asked right now. Where's the market going? What's the interest rate announcement that's coming up on January 25th? You'll run out of breath with all the questions that are happening right now. It's not your fault. It's not our fault either. It's the media's fault. No, I'm just kidding. It's not the media's fault either. Everybody is commentating, everybody's observing who's taking action. And that's what we're going to be answering on this episode of Real Estate Chat, referencing Robert's. Is prediction an okay word to use? Maybe we're going to find out. We will definitely use his charts, which are great navigational aids to educate yourself on this market. And if you click on subscribe, I keep sounding like I'm saying unsubscribe. If you click subscribe, if you like this and you comment on this, you'll be able to join in on our discussion here on in and moving forward. And thank you for all of you who are subscribers.
What a boring long introduction. Nobody's going to be listening now.
Did we reshoot that or what? No, I'm just kidding. Let's jump into what you all been waiting for. You know what? I love drawing the suspense because Robert's charts are just amazing to look at, and we will comment on that. Robert, which question do you want to answer first? When will prices start to go up, or when will prices start dropping, or what to do in the market? I leave it to you as we reference this chart here.
Okay, we have a chart there, and the purpose of that chart is to say what is normal transition from December of one year to the next month, January of the next year, knowing all the time that the low point of the whole year is December, January. So I took 22 years. In the last 22 years, 7 of those years were down, 15 of those years were up, and the average is 1.26. So I added 1.26 onto last month's 1051, and I got 1064 as the average price. So is that the same? Is that 1%? It's not down, it's up? No. And then I also said, okay, if that's one, what if it went to continue with the average for the 10 months that we've just experienced since the peak, which is 2.12%. And I got 1028. So a range between 1028 and 1064 is probably where the average price is going to be, not because of any other reason except for that's what it normally does in the month of January relative to the month of December. And the market also goes to sleep, absolutely goes to sleep in between December the 15th and January the 15th. So in this case, it was the 14th, but that's why I used the 15th or the 1st just as rough benchmarks. So we've had 2 weeks sort of, well, maybe 2 weekends of real estate market. And this week has been much better than the week before. I do the first half of the month, second half of the month. The first half was quiet, but it should be quiet. Everybody's on Christmas break, New Year's Eve. So why not?
So you're saying we shouldn't be worried at this point. And you know what, even though sales we ran it was just a touch over 2,000 at this point up until yesterday. And but we shouldn't be afraid. And you're also saying that it's not the realtors pushing these prices up. You're saying that this is something that happens every year anyway, because we look at your graph from December 2021 to January 2022, we see that. Now, mind you, last year being that big bump all the way to the peak, we saw a 7% increase. We're not going to see a 7% increase this year, Robert?
Unlikely. We're lucky to see 7% 2-year difference, which we'll get to if we ever get to that chart. But that's okay. We've had a very big run up, and now we're trying to find our legs. And we're having a very tough time because the big component called consumer confidence is shaken, and the inertia, the reason, the inertia, the force to do nothing rather than to do something is the greatest force in nature, and that's what's powering things right now. If you turn on the television, all you get is bad news and inflation. Nobody even knows what inflation is. Debt ceiling in the United States, nobody even knows what that is. They're all looking for headlines, so they're all crazy.
it's basically uncertainty at this point, but it's fair to say,
Uncertain.
and we're on the record on this, right? So Robert's estimate for January 2023 sales is that will be announced by Toronto Regional Real Estate Board in about 2 weeks, let's say, as
Yeah, about.
about thereabouts, between 1.028 to 1.064, which is a slight bump of 1 to 1.5-ish, about
And
1.5.
that is the 26th best January since 1996.
So make sure you watch.
27. It's the worst. It's terrible. It's
When
terrible.
we shoot that video, make sure you watch it and compare and see if we're on the right track with this. Now, something interesting on this chart as we expanded the view of this, I know in previous ones that you've watched here on the real estate chat, they weren't as big, but now you can see that if we project a loss of, I mean, obviously this is not going to happen the way it is, but if modeled at a loss of 1% over the next
All year.
11 remaining months, we end December 2023 with this. What's the likelihood of the real estate prices dropping below 1 million, Robert?
Good. You see, the whole thing is, as was pointed out to us by Mr. Corman, it depends on which houses sell in the course of a month. And when you average them together, what the price is. It's not the price of individual neighborhoods or individual houses, but it gives you the overall trend of what's moving. If cheapies are selling, if $5 million houses are selling, it affects the average. But for the price to drop less than $1 million will depend on which properties come up for sale and how many of them. If, as I've been dreading, there's a glut of properties that come up for sale when the crocuses appear, or maybe on March the 15th, or maybe on February the 15th, that everybody who has been thinking about selling in 2021, but they waited in 2022, but they waited, they said, look, we want to move to Florida. We want to move to the cottage. We want to do whatever we want to do. And they put it all up for sale, then there's going to be competition and supply and demand will win. So competition and interest rates are what the real estate registrant, if he has a listing, has got to overcome, making that individual property desirable, a unique set of, I'm going to say, monthly payments. Monthly payments is how price and interest rate is expressed to a buyer. And so the we don't know is based on what will happen to an individual property. We know what's going to happen likely to the overall market. Is it's going to rattle around, and we've lost 20% already. Maybe we'll lose another 8%, maybe we'll lose 12%, and then it'll rattle up, and you have the regular seasonal variation. So it's not a question that can be answered, because it's like, what's the weather going to be in June?
There's a lot of uncertainties, and there's a lot of different factors. And of course, this is just a linear decrease. Obviously, if you look at where we're going to look at, we're going to look at straight line. We're going to look at Robert's next charts, and there's obviously seasonal bumps, and no doubt spring market will be higher than January, all that sort of stuff. One thing I want to ask Robert before we leave this chart is January 22, 1.242 was the price. January 2023, 1.064. So many of you are watching this and saying, what do you mean there's a price increase? There's been a drop of close to $200,000 in terms of year over year. Yes, it's up from December. What do you mean prices are going up? So what kind of a spin should we expect 2 weeks from now from the media presenting this? And why should we be cautious about being, drawn into the fact that, oh, this is a huge price decline? What's the truth here, Robert?
Okay, well, the truth is shown on there that in 2 weeks, there will be a tremendous emphasis on the year over year change. And so the year over year change is going to be 20.24% if we figured it out right. And that's a drop.
As a drop, exactly.
And what has been presented last month was the calendar year 2022's annual price, which is all the prices that happened all year, coming up with an average compared to the year before that, 2021. And nobody thinks like that. You don't compare that. Anyway, so it's the month over a previous month, which is never the same. July is not the same as August, and July is not the same as June, but they seasonally adjust these numbers in order to make them all be the same. And so they add an artificial comparison. So your question is, compared to a year ago, are we up or down? We're down. Compared to February, the peak, we're down. Compared to the month before, we're up. And what else do you want to know? You want to know what's going to be in the future.
Oh, what's the real price? Because we also have a lot of practitioners that are, registrants. We have the consumers, the general public, and I've been hearing this term being thrown around that those were not real prices. Those are, I don't know if you go as far as saying they're fake prices. The word outlier is also being used. So were these prices real? These peak prices real? Are today's prices real? What's the real value of a house today?
Okay. People only paid 1.334 as an average price because they were getting mortgage financing at somewhere between 1.2% and 2.5% as a first mortgage for the whole darn thing, without even, well, they had to qualify for it from all kinds of lenders. And so their monthly payments were dirt cheap. And at that time, if you recall, we were hearing that, oh yeah, well, there's some supply chain issues and there's some other things that have contributed to a short-term transitory inflation that's going to go away. And so don't worry about it. We're going to keep interest rates low and for a long time. And then some few months later, they changed their mind. So what you saw there was interest rate driven prices. And the reaction we're having now is interest rate also driven prices. And what I've said all along is there's a common denominator, and that's the monthly payment, that people are paying less because they're paying more or equal monthly payment because the interest rates are higher. So where will this all straighten out?
So it's based on perception and what the confidence is. You mentioned earlier, consumer confidence. And the only curveball that can be thrown here is, correct me if I'm wrong, Robert, but inventory, the supply side of the equation, because we've seen demand dip. I mean, that's relative to, and it's reflective of consumer confidence or lack thereof. Supply could push prices higher in spite of increasing interest rates. Is that correct, or am I wrong?
Okay. We just came through the fourth quarter, which is always the lowest time for inventory. Why? It's winter approaching. And also, we've just come through, they call it pulled forward accelerated sales. We had a lot of accelerated sales that happened in the early part of 22. So they didn't have to remain on the market and be sold later in the year. They were already sold early. Now, what's going to happen next spring is what everybody is wanting to know about. So inventory right now is low, and it should be low. Who puts the property that they've treasured and wanted to sell for the last 3 years for sale in December? Nobody. You wait for the crocuses to come up and the prime time of the year. So more inventory will come, more new listings will come. Never mind the other thing about what we're doing with relists and terminates and how they calculate. But just overall inventory, there's nothing that's any good that's for sale, and it's always the case. Last year, leftovers are up, and now there's new listings that have come out that you've never seen before. Not a relist of something that was for sale for the last 3 years, and now the tenant's finally but brand new thing. And that's where the attention is being drawn to. And if they're pricing those aggressively, they're getting a lot of attention because people want to buy, but they want to buy the best deal on the market. They don't want some old tired thing they've seen 5 times before. And then, you just can't motivate them to put an offer on it because they don't want that. It's on a busy street. It's a corner. It's in rough shape. Look at the price they want for it. Like, people can always find a reason to not do something.
Absolutely. And so let's look at the seasonal prices now, because we looked at projection, we looked at the estimate for January, but let's look at the patterns of the past couple of years.
Well, we have aberration, we have a blip, we have a boom, and we have a bust shown in this map. That the red dots, 28% year over year was last year, and now we're going to see a change, -14, -17% from last year. So that's a reaction. That's a reaction that interest rates and confidence. It was extraordinary January last year. So yeah, that's where it's all there. Here we are with the other chart, which I've been trying to say with the starry, is that if we take a 2-year change, you have a better look. It throws the boom out. And so this month, with the blue box highlighting it, depending on which one of our estimates, is either 6 to nearly 10% higher than 2 years before, 2-year change, where it had been sort of around 12, 13% for a few months. But again, January is a lousy month. It's a slow month. It's the beginning month. It's everything's trying to find its footing, and sometimes it snows a lot. So,
You see the prices following on a seasonal basis, because if you look at the previous years, and we can all agree that based on seasonal patterns, prices
good
will
question.
what will we see, or what do you anticipate to see? Are we going to see more, let's say, negative price growth? Could it be possible that this spring we won't see a big bump up in average price? I'm not talking about year over year, but relatively speaking to previous months, will we see flat growth?
Yeah, well, flat may be the new up, or we may see this breaking down through the 2 years ago line as well. It's nothing says that last year is the same as this year and 5 years ago. It's market behavior based on what are people doing. If they'd rather do nothing, then they'll do nothing. We've said several times that we're getting 40% less sales than the 5-year average, which means there are some. It's not dead, but it's not bustling. It's not a boom. It's a lot of people sitting on their hands, a lot of people saying, I'm going to wait. I think it's better for me to wait. So if there's a flood of listings, then the prices may stay flat. If there's not, and we have the same ratio of sales to or new listings to buyers, and it stays consistently 40% off trend, well, then prices will edge up, because they always do in the spring.
So time will tell. I mean, it depends on where the inventory.
What a lousy answer, but yes.
Well, it depends, right? I mean, we do our best when we make predictions. It's based on actual data. Nobody has the exact answer. Nobody, unfortunately, has a crystal ball. If you'd like to believe we have a crystal ball, then click on subscribe and click like, and then write the comments. In the comments, what you think we got right, what you think we're wrong with, and what you think is going to happen in the marketplace, and how confident are you with your forecast. So looking at it here versus the estimated January 2020.
These are sales. Yeah, these are sales, not prices.
Yeah.
Yeah, so you can see we're setting a new low for the month. This is projecting based on half towards the end of the month. And so we're 47% below the 5-year average, 44% below the 10-year average, 62% below the maximum, and 53% below last year. So nobody's surprised to hear that. But it's just like we were surprised in August, we could be surprised in February.
It could be. I mean, there's 11 days left. And when I ran the figures, it was at 2,000. So another 600 sales. Who knows, maybe we may end up a bit above that, but
yeah, we're getting 120 a day for the reporting days, which is like 5 out of 7.
Oh, could we hit 3? Maybe, who knows?
It'd be nice.
We're trying to push it up.
Still lousy, but it'd be nice.
Oh yeah, it doesn't change the fact that it is a low January, right? So let's have a look at the next chart here.
Okay, well, this is the same thing, just looking against different things, but there's the same X and the same position, and it shows that it's the 26th of 27, best January since 1996. So it's too early to tell anything definite about January, but I'll bet you we're not too far off.
And of course, as we said earlier, time will tell, because once those stats are released, we'll do a video that same day, 2 weeks from now, and we will learn from it. So to put things into perspective on this real estate chat, I mean, we always, as registrants in the real estate industry, working with these numbers daily, working in brokerage business, working in the sales business, it's all about confidence, right? Everything is about, first of all, what do you perceive? And based on the news and what you're hearing, what is your reality? And then how confident are you on actioning? Are we seeing buyers sitting on the fence, Robert?
Well, sure, but they're looking over the fence. They're saying, okay, is there something I'm missing? And is there something I should be doing? Or, is there some fantastic bargain that I just have to look a little bit harder for? So they're scanning everything.
And I
And
think the tipping point will be when they see, oh, wow, there's a lot going on and it's not as bad as we thought it was. And at the end of the day, I think the confidence partly comes from what you read, what you see, what you watch, such as this, what your realtor is advising you. And in terms of sellers, like we talked about last year a lot, and I remember this because I almost asked this in every single episode: is now a time to sell? What are we seeing with inventory as of today, which is obviously a bit, well, it's still normal that there's low inventory because of the season, but are we starting to see, Robert, more sellers entering the market? Because when we recall January, February, it was the tightest inventory, but sales were explosive. Like that's what drove the prices up. Are we seeing a similar pattern to last year when it comes to inventory, or are we seeing more getting listed on the market?
no, we're not seeing more. Again, it's relative to the number of sales. And all the ratios are about the same: the number of condominiums, the number to freehold, the number of 905s to 416, the number of condominiums to freehold in those two districts. They're all right in line with everything you've seen. If you look at the daily solds, you'll see that the same underlisted by 20% gets 15 offers on it. Yes, it's sold. And the new listing is selling in 2 weekends, like it normally should. It's not a boom, but it's not a bust. It's, as Goldilocks said, just right. As long as you're not afraid of interest rates and you can overcome the buyer's fear of interest rates by, as a seller, as an individual person, showing him a way with your property that he can pay a fair price for it. And in 2 years, when interest rates renew for him at a 4% rate, much lower than they are today, that you can show him how you will help him bridge that 2-year period of interest rate hump. And so you'll get your money, he'll get his property, he'll have cheap payments in the meantime, and then he can refinance when things go back to normal after the Bank of Canada proves itself to be a follower, not a leader.
So there you go. Not a scary market, just the right market to be in. So if you have any questions, feel free to leave them in the comments. Feel free to contact Robert or myself if you need a bit of guidance in this market. Visit our websites, subscribe to this channel, click on like. If you don't like it, click on dislike, and then tell us why in the comments. But time will tell in the next couple of weeks where the market is truly headed. It is a function of the market dynamics, supply, demand, interest rates, affordability, of course, immigration numbers. There's a lot of stuff we're going to be talking about in the next couple of weeks. Government policies that are going to affect the supply side of the equation and also the demand side of the equation, of course. Robert, you're waving me for something. You want to say something else?
Well, do you remember in 2017, the Ontario government introduced 16 interventions, which screwed up the market for a little while?
That's right.
In this last week, we have seen noise made, run it up the flagpole and see who salutes it, from the Office of the Superintendent of Financial Institutions, who was getting a lot of criticism for not reducing the stress test from 2%, which was good before, but why didn't they reduce it down now? So he's saying, well, we'll make it more difficult because he's concerned about the financial system's integrity. Now, the financial system's integrity is based on the underwriting. And if those bums at the underwriting department of all those institutions were slackening off because they thought they were protected by the stress test and they took bad loans, well, it's their own fault. So he can't protect them. He's just going to tell them, hey, these are the guidelines, follow the guidelines. And if you fail, well, you've got insurance for that. Don't start messing around with the market anymore, or else you're going to have people clamping down. Like they've now introduced 2 rules. No foreigners can buy. Another rule: if you sell within 365 days of when you acquire it, even if it's your principal residence, sorry, it's now a business tax. It's taxable as a business income, 100% on the gain. So stop intervening. Let the market be the market.
Let the market be the market. And on that note, thank you so much for watching this episode of Real Estate Chat. We will see you in our next episode. Thank you, and bye for now.
Oh boy, was that a ramshackle or ramshackle? I don't know.